Wednesday, April 28th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to quickly look at the minimum wage debate in the US. There's talk that the minimum wage law will be set at $15. I'm going to link that to silver to see how still much of a ripoff $15 is to the average worker. And we're going to see that silver and gold as well are not just a commodity that people trade to make money. It's even an oxymoron to say that, because silver and gold are money. You can't make money from money. So yes, you can make fiat currency from trading commodities, and that's what the powers that be want you to do. And that's why they created the gold COMEX contract just a day before they legalized gold again, back in January 1st, 1975. Even WikiLeaks document shows that their strategy is to make gold and silver look like risky commodities so that people will not get the physical commodity, the real thing. They won't stack gold and silver. That's their Achilles heel. And that's why it's so important that this silver squeeze, Wall Street silver, whatever you want to call, movement started. I was on yesterday. It was called the All-Star Silver Panel. I know it sounds a bit pretentious, but I was invited to be on it, on the channel Liberty and Finance. Had to get up early. Actually, I went to bed earlier than usual, around 10 o'clock. Got up around 12:30 London time. And it started around 1 a.m. London. Conference or panel is going to be released Friday, 9 p.m. New York or Eastern time. I will hopefully have that video as well published on my channel later on. It was great. I was tired, but it's the least I can do to help the movement. Yes, there's a new Silver Squeeze 2 movement. The intention is to buy as much silver, physical silver, as possible on May 1st, which is Saturday. I guess it doesn't have to exactly be May 1st because it is a Saturday, as long as you're doing it right now. I think it's up to the individual, of course, to buy as much as they can. And even if you can't buy it, don't buy it. Of course, I don't recommend people borrowing money to do these kinds of things, or borrowing fiat. But I've been buying for the last few weeks. I might buy a bit more in the coming days. But a lot of these guys, their goal is to buy 100 ounces this week, or preferably on Saturday. So that would be interesting. Yeah, and so now to the minimum wage. And what has it got to do with silver? Even the FT is covering this. They say Joe Biden signs executive order to raise federal minimum wage. U.S. president's move to lift pay to $15 an hour also ramps up pressure on businesses. So, of course, the workers are happy about this increase. And as usual, business is not. I have to say that I don't think government should be involved in setting prices. It's not a free market. There should be a free market, but there should also be sound money, right? So that's a huge problem. I'm not going to go over the article. What I wanted to show you, though, is it's kind of like a meme, I guess. And I actually took it from the jsmindset.com website, which is Jim Sinclair's website. And it says, in 1964, the minimum wage was 90% silver quarters. So there you go, the 5 quarters. I've got 5 silver quarters here. I think 4 of them are 1964 and 1 is 1962. So 5 coins. I did the calculation yesterday. I weighed them, of course, and then in grams multiplied by 0.9 because they're 90%. And I came to around 28 grams, which is less than 1 troy ounce, of course. One normal ounce, not a troy ounce, is 28 grams. But don't forget, in precious metals, we talk in troy ounces, not the imperial, the normal ounces that we look at usually. So it says in 2021, 5 of these 90% silver quarters have a melt value of $23.34. I did the calculation yesterday when silver was around $26.30, and the melt value was actually 24. So it fluctuates, of course. And it says we don't need minimum wages, we need sound money. And how true is that? It might not sound a lot that the minimum wage or the average worker was earning $1.25 in 1964. But it was quite a bit. It is a lot more than $15. So that's what I was trying to say. It's still a ripoff. So yeah, it just goes to show how the powers that be have basically ripped the public off through the fiat currency system, through taking the country and the world off silver and gold for that matter as well. So that's why, to me, trying to inform the public, educate the public about sound money, about silver and gold, is more than just making a buck or a fiat currency profit. It's more longer term. It's more generational. It's trying to wake up the public to show that if the world is going to be fairer and more prosperous, yes, there will always be people who are richer than others, who have more than others, but I think sound money levels the playing field. And I'm not a socialist or a communist. I'm not even a Republican. I'm apolitical. I just think that we need more justice in the world, more balance. So sound money is really important. Without sound money, people cannot protect the fruits of their labor, their property. And that's why Alan Greenspan, who of course is kind of a Jekyll and Hyde individual, wrote in 1966 that only gold can protect economic freedom, and that statists hate gold and silver for that matter as well, of course. So I know 1964 is a long time ago, but it's not that long ago because it was the year I was born. So people who knew about these things back then, that silver and gold were sound money, and the fact that they took the coinage off silver after 1964, they knew that there was going to be a great inflation, and they were clever enough to hoard these silver coins. And why did they have to take silver off circulation? Well, because they inflated too much the fiat currency. They went off gold. They were spending too much money as well already in the 60s before Nixon closed the gold window, and the price of the commodity silver became worth more than the face value. So the coins went out of circulation. They knew that was going to happen, so they basically took the silver off the coinage after 1964. In other countries in Western Europe, North America, and Australia, New Zealand, I think they had it a little longer, into the late 60s. Countries like Germany and Austria, I think, had silver in their coins until 1974. And I think silver and gold will continue to protect people against inflation. They will continue to be money. No matter what people tell you. Yes, I get a lot of comments. I saw one this morning saying that gold and silver are finished, that I'm deluded. I'm actually very happy about that comment because it shows that I'm still a contrarian, it shows, unfortunately, that a lot of people will get hurt when the big inflation really materializes, and I think we're very close to it. So there you go. It's not just about making fiat currency profits. It's about protecting your savings. And people in Venezuela and other countries like Zimbabwe, Weimar, Germany, they learned the hard way because I'm sure a lot of them were trading gold and silver, and they said, wow, gold has really gone up. We're going to get out now back into the local currency. And they were basically decimated. Their savings were decimated. So in a hyperinflation, in the last legs of a fiat currency regime, you don't trade gold and silver. And as much as it is frustrating to watch the price move on COMEX, the paper price, we should try to ignore it, even though we look at it a lot. People like us who are in the gold and silver market, we should maybe count it as a blessing that we can still exchange the fiat currency for real money. And we just need to be patient. We need to make sure that we don't overextend, we don't buy or we don't exchange too much into the precious metals. And that's not because it's no good. It's because you need some liquidity to pay your daily bills, weekly, monthly bills. So you got to be careful. And that's why gold and silver are such great instruments. They've actually, the powers that be, have done us a favor, because we need to be really frugal and careful in saving precious metals, because there's a lot of pitfalls, and I admit, and mainly it's man-made, the manipulation. It shakes people out. I've been doing this since 2002, and it served me well. I started stacking gold and silver. Gold was $320 per troy ounce. Silver was less than $5. So yes, it's been very frustrating many times, but over the long term, it's paid off. Andy Scheckman from Miles Franklin, he was on the All-Star Silver panel last night. And one thing he said is when he started out in the business in 1989, he was only 19, and his father owned the bullion dealer. And his father told him, the only thing I want you to do so you can keep your job is that every 2 weeks when you get paid, you put aside a little bit of silver. And he said he's been doing that since then, and it's served him well. And I think we should try to follow Andy Scheckman's strategy, his father's advice. I think that's a good thing to do. The bankers hate when you buy the real thing. They want you to stay in their paper game. The paper game, of course, is the futures market, the ETFs. Yes, there is one ETF that is different. That's the PSLV. That's the Eric Sprott or the Sprott ETF. They buy the real thing. So if you buy the PSLV shares, they will be buying real physical silver. I personally prefer to have the silver at hand. I don't have any ETFs. So with that, let's look at where the markets are this morning. It's 8:30 a.m. London time. So right now we've got spot gold at 1767, down just over $9 or Federal Reserve notes. The low's been 1766, the high 1782. Silver's down 30 cents, just below 26. I think Chris Marcus said something the other day. He said that they're trying to keep silver pegged to 26. That could be right at the moment. We're just below 26. The low's been 25.88 and the high 26.43. Just to give you an idea of the open interest for May silver, yes, that's dropped another 17,000 So it's now at 24,286. That's just over 120 million ounces. But even when the May contract becomes deliverable next month, you could see people still go in to the market, into the COMEX, and buy the May future contract. They'll call it the May spot contract, and ask for delivery. So the COMEX is still not out of the woods, but it looks like there won't be a problem this week with the May contract, but we need to keep an eye on that. To the stock market, the Dow future is down 40 points. The NASDAQ 100 future is down 33. S&P futures up 2. The currencies, sterling is down 0.25% at 138.72. The euro is down 0.2% at 120.63. The dollar is up 0.25 versus the yen at 108.96. Dollar is unchanged versus the yuan at 648.30. To the commodities, high-grade copper has come off a bit. I think we're trading around 450 yesterday. Right now at 445, which is still quite elevated in terms of price. We're less than 20 cents away from the all-time high. Right now it's down 0.75%. WTI crude is up 0.2% at 63.01. And to finish off, the 10-year yield has picked up since I made my video yesterday. I think we were at 157, so it went up yesterday during the day, and it's up another 2.5 basis points this morning at 165. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.